Hey, what's going on, folks? I'm Anthony Armstrong, realtor here in North Texas, former NFL player for Washington. And today I just want to talk to you on this lunch with a realtor. I was having a conversation today with a friend of mine who I've known him for a long, long time, and he's looking to move to the area, and he's a veteran. So thank him. I thank him for his service, but he's going to be able to use a VA loan to purchase his property. Now, a VA loan is something that is only available to military veterans, and you have active spouses as well, but generally it's going to be reserved for that population. I mean, it's the least that you can do, right? But there are a lot of benefits that go with using a VA loan, and it's something that if you can qualify for it, it can be very helpful and beneficial for you to utilize that to get into a property. So I wanted to make sure that I took the time to go over some of these different benefits, some that I've heard of, some that I haven't heard of, and how they can really help you and benefit you in the long run. So let's take a quick look see at a couple of things. So first things first, the big one is that there's no down payment required. Generally, when you're going with a getting a loan, you can take a conventional loan, 3 to 5%, depending on your credit, assets, etc. And then in an FHA loan, you're thinking about 3.5%. It can always go up from there. But the VA loan and the USDA loan are two specific programs where you don't have to have a down payment amount. So you can see right there in the screen that's being shared that FHA loans 3.5% and conventional is often 5%. So a military borrower would be able to get into one of those properties without having to bring that cash to the table. Now, it doesn't mean that you won't have closing costs, because those things are going to be there. But there's something that's out there to help you out with that. It's called the 1% rule. And I talking to my friend about it. He gave me a great breakdown. He read it directly from the page. The 1% rule says that you can be charged up to 1% of the purchase price of the property for any additional fees, like lender application fees, courier fees, notary fees, postage, things of that nature, right? Brokerage fees. If they charge you that 1% fee, there's a cap. So if they charge you that, you won't see anything additional on top of it. Scrolling down here, number two, there's no private mortgage insurance. So that PMI, that's what lenders are going to add on whenever the borrower has less than 20% of equity on the property. When you are at a conventional loan, and FHA, it stays for the life of the property. But if you're on a conventional loan, once you hit about 78%, that drops off automatically. But if you have your property's value go up, you can get that PMI removed sooner. But with a VA loan, you don't have that PMI on there that's going to add additional amounts. So you can see PMI savings per month, and this is from the Veterans United website. PMI savings per month, if the loan was, let's go here, $350, you're going to save about $268 a month. It's not too bad. There's also competitive interest rates, different things that'll be available to you, relaxed credit requirements. You can obviously go and see what you're going to be able to qualify for. Now, there are a couple other things that are actually going to be beneficial to you as well. One of them is the fact that you will have, at least in the state of Texas, you have some benefits that you'll be able to add to your property in relation to property taxes. So if you have a disability, you'll have an ability to have a portion of your appraised value by the county be reduced. So that means your taxes are going to be less. So you just make sure that you check into what your different VA benefits are, and it could be something that is going to be helpful for you. Now, here's a couple of questions that you may be having. Can you use a VA loan on new construction? Yes, you can. You can do it on an existing property as well. Since it's government backed, you're not going to necessarily be able to go get anything, right? You may not be able to go do a flip, may not be. And then there may be some scenarios where you could, if there's a specific loan that addresses that. But generally those government backed loans, they want the home to be in a certain condition. Basically, you can't have something that's not going to have any floors. The water has to be running. The AC has to be working. The roof has to be in good shape as well. So VA loans don't necessarily apply to everything, but they are going to apply to pretty good properties, really good properties, essentially. The loan limits, you have a loan limit that's as high as a conventional loan. And in recent years and months, that loan limits have gotten upwards of $700,000. So you'll probably be able to utilize your VA loan just about anywhere that you're at. All right, just about anywhere that you're at. And there's also different variations of the VA loan, like VA construction loans and VA land loans. And there's a lot of different options that are out there. But you just want to make sure that if you're in that situation, make sure you're going through your benefits, make sure you're staying to it and keep working at it to make sure you get all the benefits that are due to you because you deserve it. You served, and it's out there for you to utilize. So thank you guys for hanging out with me for this lunch with a realtor. You want any more information or you have any questions, you need to maybe set up a consultation. Let's have a conversation. Check out my website, www.agentarmstrong.realtor, and I'll be connecting with you. Good luck. Talk to you.